Hello and welcome to another exciting edition of Fingerprinting Gurus. My name is Tommy Watkins, your instructor, here for a new and exciting topic this week. Before I get into this week's topic, I'd like for everyone to go ahead and hit that like and subscribe button and a notification bell so you too can continue to receive content like this. Not only help to assist you in your ink card fingerprinting business and your mobile ink card fingerprinting business, but help you as an entrepreneur as well. This week's topic is the big three business credit bureaus. And where we want to go with that is the big three credit bureaus are Dun Bradstreet, Experian, and Equifax. And of course, when you're trying to get business loans to establish payment terms with a new vendor or get any type of business credit, your business credit report can be a major factor in your success. However, each commercial credit bureau looks at the information they gather in a slightly different way, which makes understanding business credit reporting a bit confusing. Here's what you need to know about business credit bureaus, the information they collect, and how it affects your business. So first, we're going to start with Dun Bradstreet. Of course, you know Dun Bradstreet is one of the big three, and the only credit bureau that focuses exclusively on business credit. They report primarily on how businesses interact with their vendors and other suppliers, which is why potential suppliers often look at DMV reports before they offer your business a trade line or trade credit, basically. In addition to business data submitted by suppliers, DMV also look into your public records, industry data, and other historical data in your DMV profile to compile their credit score, of which the Payday Score, which is best known as. Of course, let's talk about the Payday Score. The Payday Score is the 100-point Payday Score reflects how reliable you paid your bills and kept your financial obligations to the vendors and the suppliers. That report to DMV. Unfortunately, if you are current with suppliers who do not report to DMV, that information won't be included when calculating your Payday Score. Because the Payday Score is so important, you should encourage current vendors and, of course, past vendors who don't report to your credit history to do so with DMV. You may even want to switch vendors if they fail to do so. And also, I'd like to touch on other DMV credit scores includes a delinquency predictor score. This right here pretty much entails the score measures whether or not your business is likely to pay its bills late or go bankrupt over the next 12 months. A failure to score. Failure to score is the score is designed to predict the possibility that a company will seek legal relief from creditors or go out of business and leave creditors unpaid in the next 12 months. Next, supplier evaluation risk rating. This rating predicts the likelihood that a business might stop delivering on its goods and services over the next 12 months. How about Dmv rating? Your Dmv rating, this rating relies upon a company's financial statements and other public information to develop an overall rating for business creditworthiness and how to make sure that your Dmv profile includes accurate and up-to-date financial statements can greatly improve your Dmv rating. But least but not last, for its DMV, Credit limit recommendations. Banks and creditors may look at this recommendation, which is based on the business size, industry, and payment history. So let me, as far as your company, no matter how small your industry is or your small business is, if you're within that 2 year, 3 year age for your business, you can obtain business funding. It's all about having your financials in line, paperwork, bookkeeping, and accounting in place. It doesn't take much, ladies and gentlemen. Just have money coming into your account to show these bureaus and, of course, creditors and others that you have money trickling into your business on a consistent basis. Equifax. Equifax is another credit bureau. This is the second one that we're speaking in regards to the big three. And Equifax transformed data collected by small businesses finance exchange into reports. Basically, because the data directly reflects how small businesses interact with lenders, banks, and use it to evaluate your company worthiness. Like the other business credit bureaus, Equifax also use trade credit information and data from the public records, such as liens, bankruptcies, and judgments against a business to compile a company credit report. Equifax credit reports includes payment trends and payment index. That right there typically means that this is shows that the business payment trends over the past 12 months and how it compares to the industry norm or the standard. Equifax business credit risk. This predicts the likelihood of a business incurring a 90-day severe delinquency or charge-off over the next 12 months. The score ranged from 101 to 992. Lower scores indicate higher risk. Equifax business failure score. This right here is nothing more than this right here predicts the likelihood that of a business failing through either formal or informal bankruptcy over the next 12 months. It ranges from 1,000 to 1,610. Lower scores indicates higher risk. Least but not last of the big three, we're going to talk about Experian, business Experian. Experian collects credit information from suppliers and lenders. They also look at information available to the public records, including legal filings from your local and county and state government, as well as information from your credit card companies, collection agency, corporate financials, information, and other databases. Experian also gathers a lot of data from banks too. They look at the number of credit transactions, outstanding balances, payment habits, how much you have available for credit to use, and the details of current liens, judgments, or bankruptcies. Time in business, the size of your business, and the business standard industry classification known as the SIC code, or pretty much known as the NAT code, which I'll be that's going to be another live coming up in another day. So the SIC code and the NAT codes are directly linked to one another. Also, parts of the Experian Business Credit Score. This score ranges from 0 to 100 and breaks down as follows. 0 to 15 is high risk, 16 to 30, medium risk, 31 to 80, good credit, 80 to 100, Expert credit. And of course, Experian also generates a financial stability risk rating that measures the risk of companies going into bankruptcy or severe financial distress within the next 12 months. This rating ranges from 1 to 5, with the lower rating indicating lower risk. Because Experian collects both trade data and bank data, their business credit reports could be considered the most balanced of the big three. Whether you rely primarily on trade credit for capital, access from capital from banks, or both, Experian will have data on your business. Also, I would like to also touch upon, really didn't have to, I could have saved it for another live, but Dmv number will be taken over by UEI, and this right here has been in effect since December 2020. SAM's generated what they call a unique entity identifier, known as the UEI, will replace the DUNS number and become the official identifier for small businesses and businesses. Now, entities requesting a UEI number will go to SAMS.gov to request their entity and make any updates to their legal business name and physical address. So, ladies and gentlemen, that's all I have regarding the big three of the business credit bureaus. If you have any questions in regards to this content, please feel free to hit me up in the comment box, ask me any questions that you like. I myself and my business have benefited with the big three. It's really great feeling having your books and accounting in line. You know, you can really do things with your business when you have your books in order. So I'm Tommy Watkins of Fingerprinting Gurus. If you won't mind, ladies and gentlemen, just go ahead and hit that like and subscribe button and the notification bell so you too can continue to receive content like this each and every week to not only help you as an entrepreneur, your ink card fingerprinting business, but your mobile ink card fingerprinting business as well. Again, my name is Tommy Watkins of Fingerprinting Gurus. I'll see you on the next new exciting edition of Fingerprinting Gurus. Thank you.